We are live. Well, sort of. You're not listening to this live, but Jerry and I are live to the both of us.
We're alive.
We are alive too. And it's the Long Only Podcast.
And he's
And
Doug.
He's Jerry. His name's on the firm. Mine's not. So, Jerry, what's been up?
Well, it's interesting because the market has been up and setting new highs. And I think it's been quite misleading for most people who aren't regular observers, because I think there's this perception that things are hunky-dory in market world, when in reality it's being driven by a very few number of companies. I think we've talked about this.
We have. Yes.
I'm sure we've talked about it.
I call this incumbency because it's jargony.
It's an incumbent problem. And I don't let me preface all of this with, I don't have any problem with large, gigantic, huge, massive companies, as long as they're not being given a pass or given special treatment from government. And I don't think that's happening in most cases. The company of the day is clearly Nvidia. It's the most important semiconductor company in the world, making graphics processors, which are extremely powerful processors, very expensive and in short supply. And Nvidia is crossing into a $2 trillion market cap. In full disclosure, we owned Nvidia for about 17 years, did very, very well with it, sold it in 2019 or 20. At a significantly lower value than it is today, but we still made something like 42 times our money on that. So I think we sold it around a $400 billion market value. So, it's quadrupled since then, but when you're up 40 something X in 17 years, you decide maybe it's time to move away. And when a company gets to be $500 billion or thereabouts, for us, it's too big for us and in our growth strategy. So we have no chagrin about our selling Nvidia, and it's continued to be extremely important. And this is what we thought Nvidia would be. It's why we bought it and owned it for so long. And by the way, in the interest of describing patience in investing, that 17 some odd years that we owned it, and there was a period there where we actually owned it maybe 7 years and sold it because we were frustrated because it wasn't going anywhere. And then fortunately bought it back fairly short after and realized, this is a mistake. We got to hang in there and stay with it. And I think we paid basically the same price we sold it for maybe a year later. So it's a 17-year period of time with a little break in there. But it wasn't until the last 4 or 5 years that we owned it that it actually exploded. And how many folks, professional money managers included, would not have given a company that much time to come to fruition. And so I would say, accuse us of cherry picking if you want, but that's one of our great successes in my career was hanging in there with a company like that hadn't done very well, or just hadn't done enough, if you will, for like the first 10, 12 years that we owned it. And so much so that at one point we lost faith and got out, and then panicked and got back in. But then it still took 6-7 years for it to come to fruition. And then when it did, it was just amazing, and it's continued to be amazing. And it's driving a lot right now. I mean, heck, the other day when they reported earnings, and they had just a bang up earnings, amazingly good earnings. It was a market driver. But what we have is, we've talked about that magnificent 7, maybe it's 10 companies that are such a significant percentage of the movement in the S&P 500, which is so broadly considered the quote unquote market. The fact is most companies are not participating in that. And we are, in our portfolio, our growth portfolio anyway, we've participated on the income side, which is interesting, over the last couple of years, but not on the growth side, as it's been underperforming the very mega cap big tech names. And in fairness, they finally got big tech right. Nvidia is clearly a technology company.
It's not
we've always taken
technology company or media company masquerading as a technology.
Correct. Company. We've always made that. It's clearly a very, very good technology company. And Jensen Huang, the CEO. I remember, I think when we were first doing due diligence on it, it was late 90s, and going and seeing him in an analyst meeting and coming back to my team and saying, that's a guy I want running my company. I mean, he's just a phenomenal manager. Now, it's different when it's a $2 trillion company than when it's a, $400 million company. And he's been able to, obviously prove that he can manage a gigantic company as well as he did a smaller company. Kudos to him. And we need to point out, great managers when they exist. You hear all about Elon Musk and, or Steve Jobs. Jensen Huang is not necessarily a household name, but he probably should be. He's just really done a great job. Just wanting to point out that these new highs in the market are being driven by a few companies. We really need to get that broadened out. And after 5 years or so of significant outperformance from our more smaller, growthy companies in our growth strategy, I've had a couple of years of underperforming. I think that's going to change because that's been so driven by interest rates and inflation, and which is the worst we've seen in 50 years, 70s. Is that 50 years? And I think we're getting past that. As we've said, I think we probably risk interest rates pushing too hard on higher interest rates, pushing too hard on the economy, and probably creating, more weakness in the economy than we would need to have because of that. When I say need to have, you never need to have it, but the policymakers who think that economic growth, people working, causes inflation, which is nonsense. Nonetheless, they're probably going to at least slow the economy more than it would have otherwise been slowed had we not had now these higher interest rates. And in and of themselves, I mean, we were arguing for higher interest rates for years when we were at 0% interest rates, and here we are now finally getting higher interest rates. And we're saying, well, geez, they shouldn't. They've overdone it. Well, it's because they've been asleep at the switch for so long with 0% interest rates. It's kind of like, okay, now you're doing it at a point in time where the economy is more susceptible. And, more than anything, what's horrible about it is they think they have to slow the economy to stop inflation. If we aren't once again proving that economic growth is not a driver of inflation, I don't know what more we need than what we're seeing right now. The economy has continued to grow, albeit slowly, in what it was a ridiculously high inflation environment, and now inflation has kind of started to wane a bit, and it's hard because so many people are still paying so much more. For all of us are paying so much more for basic items. Well, that's what happens when you have the kind of crazy jump in inflation because of massive spending from government. That's what happens. Unfortunately, it's not likely to come down. That's the really sad thing. And I think we're about to hear, maybe is it tonight? I'm telling you what day it is, right? State of the Union. I think Uncle Joe's is going to give a State of the Union address, and so reportedly he's going to trash companies for shrinkflation. Putting fewer potato chips in the bag as a means to get away with jamming people for more profit.
Well, it's an annoying thing nonetheless, but probably not the thing the president should be focused on.
No, and not the cause by any means.
Yep, exactly.
It's your spending that has done this, knucklehead.
I think I'll be watching old Schoolhouse Rock videos on YouTube. They'll be more educational and have a better time. So.
It's Lent and I'm not watching TV, so his State of the Union will be one I'm gladly not going to watch. Anyway, so you asked a question about the market, and here I am on a diatribe.
I think I said, "How's it going?" and that was 10 minutes ago. But I do want to get into something.
Where it's going is it's making new highs. Where it's not going is it's not enough companies are participating in that.
Well, let's talk about something that I thought of this subject, and you assented to it. This goes into an idea: the market versus the economy. They're not one and the same. There's overlap. They're two different and related items. People often mistake the two, one for the other.
Yeah, and I mean, generally speaking, the market is a discounting mechanism that's discounting. In fact, I would argue is is overly discounting one way or the other. Um, on a regular basis. I think we talked about this. We talked about it offline. I don't know if we talked about it online, that there may have been an inflection here recently that, I mean, we're once again seeing our earnings for our companies come in good. In fact, they've been through this whole period where they've underperformed stock price wise. They've actually in general done pretty well in their earnings. They've managed well. We can't, in the aggregate, you always have your problem children, but in the aggregate, they've managed through this difficult time, both COVID and post-COVID, well. What we're seeing now is actually really good earning. Like, they're banging it out of the park at the moment, and almost across the board. Even the problem children are acting better. And, I think that could be an inflection. If you were to get a combination of relief on the interest rate and inflation side continuing, and I think you will. God forbid you should actually get some policies that are halfway decent, or at least just a stopping of the massive spending sprees that we've seen over recent years. Which means, as let's put it this way, a government which doesn't allow that to happen, i.e. a divided government, might be the best darn thing that could possibly happen. Keep everything at bay, keep them from being crazy in their spending. If we got that combined with the inflation and interest rate relief, it could be a Katie bar the door, rest of the market starts to really pick up, and then you could go on to really significant new highs, and you might see those larger companies. And actually, given the size of those companies now, that 7 to 10 companies that drive the market for the most part, you might actually see the overall market averages not really do as well. And you'll start to see some of these smaller and mid cap indices, and just in general, the broader market do pretty well. But it may not show up as much in the averages because they're so heavily, because all these averages are market capitalization weighted. You could end up seeing where the overall market, if those, if the Magnificent Seven should suddenly stall, which would not be surprising given how they have driven things, you could see the overall market averages maybe look like yawners, and the smaller indices and the broader market do reasonably well. I think that's probably an inflection that's, if it hasn't happened already, it's probably out there in the not too distant future.
But do you think that we're talking about the differences between the stock market and the economy and the distinction between the two? It's not merely a question of the fact that the stock market can be manipulated by the performance of a few outliers in terms of size. The stock market generally gives, the old adage back when I was in high school used to be, the stock market allegedly gives you the opinion of what the economy is going to be 6 months from now. And I think that and it's important to see that the stock market is a method for investment, but that can often be very different than what we're seeing in terms of real transacting of business in the economy. Sure. And also the stock market is structured in such a way, just the way that it works. You've got a few companies that can really pull the stock market up. And then also, let's face it, a lot of America doesn't own assets. So it's very easy to have a situation like 2020, the second half of 2020, where the people who own assets, and I'm closer to a have than a have not, so I'm putting myself in this category,
right?
By the grace of God, I should point out, but did pretty well. But the mainstream
did very well. Did very well.
But not everyone has a healthy retirement account full of stocks and things like that. So you can have a very good performing stock market that really just makes the rich richer and doesn't do anything for the average person's experience in the economy as a whole.
Well, that's the problem with why, when we talk about these few gigantic companies that have, advantages in the market. And let me put a footnote on all of this. I am absolutely opposed to what we're seeing right now, and it's kind of oxymoronic. We're seeing the FTC putting the brakes on every merger and acquisition, it seems, that comes along. We're seeing the government trying to sue some of these, what are really great companies, and I may have my issues with individually these gigantic companies, the Magnificent Seven or 10, whatever you want it to be. But in general, they've been great companies and they've been very successful. So it's the oxymoronic aspect of it is there's aspects to where the government has allowed this to happen, not because they were necessarily trying to benefit those companies, but in their effort to try and I'm not even going to say this is nefarious. I've made this point before. In the effort to try and stop the ills that have happened over the last few decades, every crisis results in some sort of government intervention that's regulatory. Just by that very nature, they've made it harder for smaller businesses to compete with these guys. Okay, that doesn't mean I want them to go out and take these companies apart. These are some of the greatest companies in the world. They happen to be American companies. God forbid what we're doing is out there trying to crush our American great companies, while inadvertently propping up, foreign actors that are not necessarily our friends. I think that's the difficult, and I'll use that term again, oxymoronic situation that we find ourselves in, and where we have to be careful not to confuse globalism with the global economy, for one thing. I'm all for, as much as we possibly can, have the trade situation be as level as we can. And I think the way to do that is one-on-one trade deals, not massive, huge, gigantic, everybody's involved in a North American free trade deal or a generally accepted agreement on tariffs, the GATT type stuff. Now we're getting into the weeds, but my point is, I don't want to take these. I want government out there taking our great companies apart. By the same token, I want the government to get the heck out of the business world and let small businesses flourish. And when they put onerous regulations on small businesses, everything from the corner grocery store to the mid-sized wealth management firm gets negatively affected and has a hard time competing with those larger companies. And like I said, I don't think it doesn't even have to be nefarious. It just happens. It's what happens. And so I think that any relief on that front could be a great boon to business, because the fact is there's plenty of still, despite all the problems we have culturally and what have you, there's still some great innovative ideas out there, primarily emanating from America, but also other places that are, we talk about Israel all the time, and Israel's in the news a lot because of the horror of what's happening with their war, but remarkable technology that comes out of that place. And there's a symbiotic relationship between the technology sector here and the technology sector there, and each one can help the other, and vice versa, whatever. So the bottom line, as you asked this question about market, is I think we might be looking at a bit of an inflection here, and if we get some things right on the policy side, it could be really a good time.
And we're going to switch gears, but not entirely. We're going to talk our own book for a minute, and this does relate to Nvidia, because Nvidia has been very kind to this asset recently. But we've got what's going on. I call it the Render-ssance, which is the upswing of the render token that is the product, the tool of one of our private investments, Otoy. So this is the crypto token that is used to facilitate this outsourced graphics processing for complex 2-dimensional, 3-dimensional graphics that Otoy again facilitates. And Render's gone bonkers. It's RNDR. And this is largely a product, Jerry, of what happened with Nvidia last week with Nvidia's banger earnings.
Yeah, I mean, I mentioned when we were talking about Nvidia that there's a huge, problem in a short supply of graphics processors, which are used for not just the complex rendering for 3D video, computer graphics, for movies, videos, games, whatever. And I might add, there's much more to it than that. But this is stuff, whether it's augmented reality, virtual reality, is used in training and in enterprise all over the place, and that might be even the bigger ultimate application. AI being used for these kinds of in these functions is extremely important. AI is big hype right now, but what you have with the render network is actually a real use case. It's not a joke. It's an actual network of distributed graphics processors that helps to ease the burden of the lack of supply, as well as make it much more cost effective and efficient to render computer graphics, and also potentially to be used for whatever other types of high performance computing jobs that need to be done. So, and this is not a new phenomenon. Yeah, this was the network was begun in 2017 timeframe. I think the late 2017 was when the token was first issued, and it had an immediate, when that whole crypto craziness happened in 2020, 21, it ran way up and then ran right back down. Now we're crossing over those old highs, only in a much more valid, shall I say? In other words, the network is more support. It can support these kinds of values. It's still extremely valued. I mean, network, if you were just running it on a pure, cash flow standpoint, it's way highly valued. But it's now really discounting. Okay, what does this mean for the future? And if you get to, starting to, think through what that might ultimately become, how valuable is a network of distributed GPUs in a world which is, clamoring for this very, very sophisticated, high-end, complex computing hardware. I hate to say sky's the limit, but I mean, there's a significant opportunity there, and Otoy is at the heart of it with their render network, and the values being recognized in the token. It goes back to what we've said before with crypto: is the product is the investment. So the product being the network's value increases as the network gets used more, and I think it's a win-win for artists who want to use this type of technology and have been, sort of locked out of it because of lack of resources. This gives them, I hate to use this term democratization. I really hate it, but
let's use a kind of word. Let's use communism.
No. But it does give more access to folks that might not have had it before.
It's like Airbnb for graphics processing.
We have said that.
To use the metaphor I hate. So
yeah, but it kind of is.
It kind of is. I compare it to you've never corrected me on this. Maybe it's because you aren't familiar with it, but no one's ever called me out on it. But I just compare it to how the Hubble telescope worked. I thought the Hubble telescope was using outsourced processing back in the day of, when only the geeks were on the internet. So, but there's probably.
Did that finally blow up?
I don't know.
It's out there somewhere, right?
I think so.
It got, years ago, it went past Jupiter, I think. It must be is it beyond Pluto now? I heard Pluto is a planet again because of Arizona.
That's what I think. They're very sensitive to that in Flagstaff. So up in the observatory, the Lowell Observatory, which they want to make Pluto a planet, which is a nice little place to visit. Got a nice vista of downtown Flagstaff, so you can see it but not smell the pot.
And there's and there's a big crater not far from there.
Yes, I have been to that crater too. That's east of the city. So yeah, there's a fair amount of, for those who do the astronomy type sightseeing, the northern Arizona has got some things.
Mm-hmm.
Let's wrap it up for today because I'm about to run out of battery. So we'll close it. Remember, view us on taylorfrigon.invest, our website, taylorfrigon.com. Of course, we've got our YouTube channel here. And you can also email us at longonly@taylorfrigon.com. Until next week, I'm Doug.
I'm Jerry.
Thanks for joining us on the Long Only Podcast.
Bye now.